Hello, everyone, and happy Monday. It's your friend Ryan Rolfe with the DSM Sold team at Keller Williams Legacy Group here in Des Moines in Central Iowa. And it's Monday once again, so that means it's time for Monday Market Update. Feels like fall outside today, and it feels like October with some lower temperatures. However, you're not here to hear about the weather. You're here to hear about what's going on in the real estate market. So, as we jump into quarter four officially, if you can believe that, technically it started last week, and yet here we are in the first full week of quarter four. Let's talk about what is happening in the real estate market and what that means for you. So overall, the market is fairly balanced, but it's certainly shifting. There's 4.3 months of inventory overall. So what that means is, if you remember from previous episodes, 1 to 4 months is what we what we would consider a seller's market. 4 to 6 months is an even market, meaning it favors both buyers and sellers equally. And above 6 months is what we would consider a buyer's market, meaning buyers have the upper hand over sellers. So we typically are still seeing new construction in a buyer's market. And if you're looking price point specific, up to $400,000 is still in the seller's market, yet it's getting very close to that 4 months of inventory. And then above that, it fluctuates really based on the amount of inventory. So the higher price points, we tend to have less homes for sale. So a slight change could move from a balanced market to a seller's market, and then back to a buyer's market from 1 week to the next, or over the course of a month. So while we're focusing most of our episode today on the price point 500 and below, so where things stay a little bit more steady. One of the nice things that we've seen is the $200,000 to $300,000 price point. Inventory has ticked up in that price, which is a positive sign. That's typically where we might see entry-level buyers purchasing their first home, or the folks that bought in that $100,000 to $200,000 price point, upgrading maybe into their next home that's heavily, if not completely, resale homes, which we have seen an increase in resale homes on the market as well, with new construction, condos, townhomes, and single family. The number of those coming on the market is trending down. So of course, with market changes, builders are starting less spec homes than they had previously. So a lot of the inventory that we've seen is spec homes that have maybe been sitting for a bit, finally getting sold off, and builders maybe pumping the brakes a little bit on putting new homes on the market. And of course, they're still listing new construction homes, yet they're just doing that at a little bit slower pace. So with the new builds down and resales carrying increased weight in our inventory growth, that is certainly relevant for both buyers and sellers if they're evaluating whether to build versus buy. Building, there's a lot of things to consider there with the state of the economy, tariffs and whatnot. And with resale homes, the more inventory that's out there means the more options for both a buyer and a seller, which ultimately means, as a buyer, you've got more options. You're probably not going to be competing with multiple other offers like we may have seen a couple of years ago. And as a seller, well, you may not get an offer on day 1 or day 14 even. The activity that you're getting on your home, those showings, those are more meaningful. Even if you're having less showings, we're tending to see more offers from fewer showings, or I should say an offer from fewer showings, not necessarily multiple offers. And yet fewer showings tend to lead to an offer that ultimately comes together and gets your home sold. As a seller, as I previously mentioned, it's important to make sure that your home is standing out against the competition, and even more important, to make sure that when we're looking at pricing your home, we're looking at, okay, what's actively on the market that your home is competing against. Those are the things that we want to make sure that we're standing out against and that we're pricing ahead of the market. So, maybe your neighbor's house is exactly the same as yours, and we priced your home $2,500 less or $5,000 less. Well, guess what? If somebody's looking at your neighbor's home, more than likely they're going to look at your home and say, wow, I love this. This is much more value for the same house. So let's buy this one. So your neighbor's house then becomes the I guess bait isn't the right word, but they're going in to see that one and saying, oh, this is great, but look at this one next door that's priced a little bit better. Let's jump on this one. We see more value there compared to the neighboring home. Again, not saying do that necessarily to your neighbor, and your neighbor's house probably isn't exactly the same as yours, and yet you get the thought process there, in addition to making sure that we have your home standing out with great photos, potentially staging, and really what we always tell our clients is we want your home to look like a VRBO or an Airbnb, something that you're going to advertise online. We don't live in our homes like that, and yet it's important that we keep them, looking like that, at least for the initial marketing push. And of course, as showings come through, maybe it doesn't look exactly the same, but we want to keep it as close to that as possible because folks are coming because of what they're seeing online. In the $400,000 to $500,000 price range, inventory is thinner. So months of inventory, as I had mentioned, can swing kind of back and forth a lot more quickly. So, 1 month we may see the $400,000 to $500,000, $500,000 to $600,000 in an even market. The next month it might be in a seller's market, and the next month it might be in a buyer's market, just based on the amount of inventory. Overall, though, as we move towards the end of the year, we could be stabilized for a sweet spot in 2026 and towards the end of the year if rates decline or stabilize. And if buyer demand picks up, the higher inventory that we see going into Q4 could fuel strong activity early into the next year, setting the stage for 2026. A lot of that is rate dependent, economy dependent, things that our crystal ball, we can't see. It's getting hazier and hazier by the day, right? That's what I always joke with our clients. Like, I would love to tell you exactly what's going to happen, but unfortunately, we don't know what that looks like. So if you're out looking to buy a home, the good news is rates are staying fairly stable, if not coming down. We'll see what happens as we get later in the year. There's more inventory, which means you have more options as a buyer. And last but not least, the market's still moving. We're still seeing activity, and we're not seeing a sign of a major slowdown. We're just seeing more of a normal market, which is great, again, for both buyers and sellers. So consider that if you're thinking about buying a home or selling, or maybe even purchasing an investment property. This weekend, we saw, let me get my notes here. We saw 224 new homes come on the market. 111 homes went into pending or under contract status, and 138 homes sold and closed. So pay close attention each week when I'm mentioning the new listings versus pending listings, meaning those that accepted an offer. Typically in the 7-day, so the 7-day window, this is just the 3-day window. The 7-day window, we're also seeing more new listings and pending, which is increasing our inventory. And additionally, seeing that in the 3-day means that, again, we're just seeing folks continuing to put their homes on the market, and maybe homes not selling quite as quickly. Again, nothing to worry about. We're getting into that end season of the year. So as we get into the cooler months, things do tend to take a little bit longer. And yet, with the snap of a finger, if something would change with rates or the economy, that could change things one way or the other. So if you've got questions on what this means for you specifically in your neighborhood, in your price range, I'm happy to get more granular with you on the details and the data around that and show you maybe what that means in your neighborhood compared to the overall market. However, this is really going over the details of everything in central Iowa and by price point specific. So thanks everybody for watching. Have an amazing week. And as always, thanks Les Solgrove with Simply Des Moines Stats and he's the MLS coordinator for No Coast MLS, which is one of our statewide systems. So thanks as always for your great information that you share each week on what's going on in the market. Of course, we lean heavily on that in addition to our own numbers that we pull each week for these episodes. So thanks again, and hope everyone has an amazing week. We'll see you next time. Bye!